lucrative, maybe even shocking financial move.
Yeah, quite something.
We're talking about India's central bank, the RBI, and their decision, really unprecedented, to sell billions of US dollars from their own reserves.
It was a huge calculated step. I mean, on the surface, a central bank selling billions, it could sound like panic, right?
Right.
But the analysis suggests this was really strategic, a defense almost, driven by immediate economic needs, sure, but maybe also, shadowed by some past international criticism.
Like those comments about India being a dead economy, that kind of thing.
Potentially, yeah. That backdrop is there.
And the immediate problem was very real.
Yeah.
The Indian Rupee, it just kept weakening against the US dollar. That put serious strain on things back home.
Absolutely. When the rupee slides like that, it's not just a number on a screen. It hits people. Costs go up. It forces a choice. Stand back or step in hard.
And they definitely chose to step in, dumping billions of US dollars onto the open market. That move really did surprise the international finance world.
Okay, let's unpack this a bit. We need to get the mechanism. Dumping billions. That's using a major national resource. What makes that risk okay, and how does selling dollars actually help the rupee right away?
Well, the key is the basic forex market logic.
Yep.
The dollar gets stronger when demand for it is high, and there just aren't that many dollars available locally.
So low supply, high demand, price goes up.
Exactly. And that rising dollar price naturally pushes the rupee down.
So the RBI basically decided, okay, let's mess with the supply side.
Precisely. The material we looked at called it a smart and courageous step. The RBI took a big slice of their foreign currency assets.
Instead of just sitting on them.
Right, and released a huge volume of US dollars into the market. That just massively increased the supply available to traders, banks, everyone.
Okay. So you flood the market with dollars, artificially boost the supply. Its price then has to fall, just basic supply and demand.
And the immediate effect of a falling dollar is a stronger rupee. It's like elegantly simple almost. You use the dollar's global strength against itself locally.
And it works fast. The analysis actually had charts from October 6th to the 22nd showing it was immediate, undeniable results.
What did they show?
The dollar index consistently dropping, while the rupee graph just steadily climbed. Proof the intervention worked, at least in the short term.
But this feels like more than just a quick technical fix. When a central bank flexes its muscles like that, it sends a message, right?
Oh, absolutely. It's a statement. It tells investors, speculators, the whole global crowd, two really critical things.
Okay, what are they?
First, that the RBI has massive reserves, they confirmed, enough to cover many months of imports. That's crucial.
For that capacity.
And second, maybe even more important, they have the will to use those reserves. They're not just sitting there. They'll deploy them to keep the currency stable.
That hits speculators right where it hurts. If you know the central bank might drop billions to defend a certain level.
Suddenly, betting against the rupee looks a lot riskier, doesn't it?
Yeah, less profitable for sure. It calms the market nerves. It's like a confidence boost wrapped in a financial action.
Exactly. It changes the risk calculation for everyone involved in trading that currency.
Okay, so stabilizing the rupee was the immediate aim. Let's look at the knock-on effects domestically. Did this help with inflation? That's always a big pressure point.
That was definitely the primary domestic win, controlling inflation. Think about it. Weak rupee means everything India imports costs more automatically.
Right. Oil, food items, machine parts.
Critical stuff. And when those import costs soar, it just feeds inflation right through the system. Everything gets more expensive.
So the stronger rupee achieved by selling those dollars.
It acted like a cushion. It helped keep those import costs and therefore overall domestic inflation more under control. Tighter reins.
Okay, yeah, makes sense. And what about exporters? We sometimes hear that a weaker currency helps them.
Well, yes, but wild swings don't help anyone. What exporters really crave is stability. A stable exchange rate makes planning much, much easier.
Predictability.
Exactly. They can forecast costs, revenue much more reliably, and that kind of long-term stability, well, that's also vital if India wants the rupee to be used more internationally, for trade beyond its borders.
Right, building that global acceptance. But we have to talk about the reserves themselves. Selling billions sounds like you're draining the tank. Wasn't there a fear of running low?
That concern was definitely raised, but the RBI stated very clearly their reserves remain adequate.
Okay.
And I think the deeper insight here from the analysts is how we should view reserves. They aren't just like emergency cash stuffed under the mattress.
For a tool.
Exactly, a strategic tool. Managing them means using them in a crisis to prevent worse problems, like a really sharp economic slowdown. The RBI used them as, well, economic ammunition.
Okay, let's shift gears a bit to the global stage, because this economic move pretty quickly turned into something, well, geopolitical. It felt like India declaring its economic independence, almost.
It was a big moment, yeah. I think historically, a country facing that kind of currency pressure might have had to go to the IMF or the World Bank.
Cap in hand, often with tough conditions attached.
Right. This time, India defended its own currency using its own financial strength. That sends a very loud message about self-reliance.
And the sources we read strongly suggest this show of financial strength actually impacted trade talks. Specifically, the U.S. side showed softness and offered some pretty big tariff cuts right after this happened.
The leverage effect seems clear. Before this, tariffs on some key imports were like up to 50%, super high.
Wow.
The U.S. proposal slashed those high categories way down to the 15%, 16% range. That's a massive cut. It signals they really wanted to keep the trade relationship stable with an economically confident India.
But hang on, let's be a bit skeptical. Are we sure those cuts were a direct result? Couldn't they have been part of talks already happening?
That's fair to ask. But the material suggests the speed and the depth of the U.S. concessions were, let's say, accelerated by India, showing it could handle its own economic stability.
Okay.
When a country proves it doesn't need external help, its bargaining power just shoots up. The U.S. likely saw they were dealing with a partner who wasn't desperate.
So what was India willing to give in return? They seem to have held a firm line on some things.
Oh, absolutely firm. India signaled, okay, maybe we can allow limited imports of certain non-GM farm products. They mentioned corn and soy meal specifically under strict conditions.
Yeah.
But a hard line on dairy, no compromise there. That's a really sensitive sector domestically.
So protecting key home industries while showing flexibility elsewhere. And they also demanded something else, right? A review clause.
Yes. They insisted any final deal must include a proper periodic review process.
Which is another sign of, what? Confidence, making sure the deal stays fair.
Assertiveness, I'd say. Building in checks so the agreement doesn't become one-sided over time or get changed without consultation.
Okay, speaking of complex deals, there was this energy subplot, too. The U.S. offered cheaper LPG and ethanol. That sounds good economically.
Very attractive on the surface.
But it came with strings attached.
Yes. The offer was reportedly conditional on India buying less crude oil from Russia.
Ah, so that puts India in a tricky spot. Cheaper U.S. gas versus a long-standing energy relationship with Russia.
It's a real balancing act, geopolitics versus economics.
And our sources suggest India's final call here won't just be about price. It'll be driven more by national security, by stability concerns.
Yeah.
How do you even measure stability in that kind of decision?
Stability there means resilience. Predictability of supply. Even if global politics get turbulent, India will weigh up which partner offers the most secure long-term energy future, considering diversification, not just today's cheapest price.
Okay, so if we tie all these threads together, the currency defense, the trade leverage, the energy bargaining, what was the ripple effect globally? Did this RBI action move the needle?
Well, selling billions, while huge for India, isn't enough to, destabilize the whole world economy. But it did contribute to a slight weakening, noticeable weakening in the overall U.S. dollar index.
Just one data point, maybe, pointing in a certain direction.
Exactly. And it feeds into a much bigger trend that major institutions are tracking very closely.
Which is?
Well, analyst reports, think Goldman Sachs, Reuters surveys, they're forecasting a continued gradual weakening of the dollar over the next few years.
And new benefits.
They're simultaneously predicting certain emerging economies will strengthen, specifically naming India, Indonesia, and Brazil as key ones likely to gain from this shift.
So the core message seems pretty clear then. The center of global financial gravity is shifting, maybe slowly, but shifting towards Asia.
With India playing a really major assertive part in that shift.
Yeah. And the RBI's move showed that having that economic resilience, it directly translates into clout in negotiations.
Economic strength is being used explicitly as a diplomatic tool, even a national defense tool. The material we read summed it up nicely, actually.
How so?
It said the RBI's action was like the military defending the borders. This was about defending the nation's stability, its future.
Which brings us to the big takeaway for you, the listener. What we're seeing is India demonstrating its, less willing to just bend to external pressure. It doesn't seem to feel the need to rely on outside institutions to defend its own currency anymore. The rupee today, it represents more than just money. It's a